Good morning, traders. Welcome to a fresh week of trading. We are going to cut through the noise and give you a clear, actionable pre-market prediction for the Nifty. We have a classic tug of war setting up on the charts, and today's price action will be all about which side wins. We'll quickly recap the critical levels, factor in the global cues, and I'll give you my definitive bias and a simple trade plan for the first hour. Let's get straight into it. Key level recap: the battlefield. First, let's look at the technical battlefield from Friday's close. The Nifty settled at 26,063.95. The bullish fortress, resistance. The bulls need to push the index above 26,126, R1, to gain any short-term control. If they manage that, the next targets are 26,184, R2, and 26,242, R3. The ultimate challenge for them is the 26,300 to 26,416 zone. The bearish defense, support, for the bears, it's all about defending the 25,978, S1, level. A break and close below this is their signal for a further fall towards 25,878, S2, and 25,793, S3. So, the immediate range is crystal clear. 25,978 to 26,126. Where we open and where we go from there will set the tone for the day. Global cues or the flat positive prediction. Now, why am I calling this a flat positive to range bound day? Let's look at the global cues. The positives is up a strong 1.12%, giving us a positive handover from the US markets. Nifty futures are also hinting at a flat positive 0.36% open. This provides a supportive, if not explosive, backdrop. The negatives or neutrals, however, Asia is in the red at minus 0.57%, and Europe is flat negative. This mixed bag from our global peers is applying the brakes on any runaway gap up. This creates a conflict. We have positive cues from the US, but negative pressure from Asia. The result? A cautious, range-bound open. My prediction is we open with a small green gap, but the initial momentum will likely be weak. The market will then look for a domestic catalyst to decide its intraday direction. Expect some choppiness as it digests these mixed signals. Trade plan or conclusion. So, here's your straightforward trade plan for the morning. Scenario 1, base case range-bound. We open flat to positive and get stuck in the 25,978, 26,126 range. In this case, the best strategy is to avoid aggressive trades. Look to buy near the support, 25,985, 25,995, and sell near the resistance, 26,120, 26,130, with tight stop losses. Scenario 2, bullish breakout, trigger. If Nifty gathers strength and sustains above 26,126. Action. Look for long positions with an initial target of 26,184. Stop loss, below 26,070. Scenario 3, bearish breakdown, trigger. If the positive global cues fail and Nifty breaks below 25,978. Action. Consider short positions with a target of 25,878. Stop loss, above 26,010. To summarize, the bias is cautiously positive at the open, but the overall structure is range-bound. The key is to be patient. Don't chase the initial gap. Let the market settle and show its hand relative to the 25,978 and 26,126 levels. That's all for this quick and focused pre-market update. If this was helpful, please like and subscribe for daily clear-headed analysis. Thank you for watching, and I wish you a successful trading day ahead.